All right, so let's do a trade day recap. We're on Friday, December 5th, and we're on NASDAQ futures. But before we do the trade recap for today, I want to share something that's been really interesting and really helpful to me lately. It's been a game changer, I feel like, so far. This is the first week I've implemented it live. And so I don't have tons of real-time live data to back it up, but I do have 4 months of backtesting data to back it up. And it's essentially this. So I'm going to take you through my process. I've been trying to get my win rate up, and because I basically am stuck around break even in terms of my trading, and I've been trying to get my win rate up. And so I backtest and I backtest and I study and I study, and I put all this energy into like, how can I increase my win rate? And I'll kind of see it move up a little bit. Like it was hovering around, I think like 41% or something win rate. And all the work that I put in the last few months kind of brought my win rate up to maybe 44%. A little bit, just a little bit. But the problem is it wasn't quite enough to have significant, consistent profitability. And so I came across a video where someone was suggesting that 3R was the optimal risk to reward ratio. And you hear so many conflicting thoughts about that. You hear people like, one of the trends on the internet now is 1-to-1 is the thing, high win rate, 1-to-1, so on and so forth. And so I actually kind of went that way at first. For the last month and a half, I've been going 1-to-1. So I guess to start off with, I was typically targeting, like I would say in my trades, I would target whatever 2-to-1. That's what I said I would do. But the data, maybe I would go 2-to-1 on something like this. Where's 2? Right there. Maybe I would go 2-to-1 on something like this. And what my data in TradeZella ended up showing me was that when it was all said and done, when emotions played in, maybe a price went in my favor, and then I brought my stop up and went to break even, and then I took a partial, got tapped at break even, or I took a partial, or however it ended up playing out. In the end, I ended up averaging 1.4R. So wherever that is, 1.4 risk to reward, which with my win rate is pretty much break even. Now, depending on where you look at it, like you could think you're red because you have a couple of weeks you're in drawdown, let's say, and you're like, oh, I'm not even a break-even trader. But if you kept going for a couple of weeks, then you'd start winning some, and then you'd be back to break-even or slightly green. And I've kind of just been hovering in this weird zone and unable to figure out how to get past that. So I went and just said, okay, let's go for a higher win rate. And I went and started doing 1R. And I found that wasn't helping. And I found that I would go on these losing streaks, for me, I can, with my win rate of call it a 42, 43% win rate, I can easily go on a losing streak of 7 or 8 trades. And then you're down 7 or 8 R, and there's just a hole that you've got to dig yourself out of. So it wasn't working. But I was thinking like win rate's the thing. It's what people are saying is, 1-to-1 R. And it makes sense. It's like, is it more likely that you're going to predict all of this, or more likely that you're going to predict this and be right? And the logic makes sense. But after I saw that video of that person claiming, somebody I didn't even know, YouTube just served it up to me. I watched it, and it was actually like, wow, that's really insightful. He was claiming 3R was like the sweet spot. So I went through all of my data, every single trade I'd taken, most of the trades for this year. The earlier ones were a little like, maybe I didn't count the earlier trades earlier this year because there was just a lot of stuff going on in the market. And myself, doesn't matter. I still counted a ton of trades. And I looked at it and I said, what is the optimal risk to reward ratio? And then when I was doing that, I also factored in my stop location, because most people will tell you, like if you're entering on this 3-minute, let's do this right here. If you're entering on this 3-minute inversion right there, close above, many people would tell you stop below the swing is the safest. But here you can see 3R would be way up in here. And today it did do it. But we have to account for how much volatility is in the market on average. And I found that if my stop loss is just a little bit below this inversion, for example, now all of a sudden my 3R becomes a lot more obtainable, right? Like this. See how much that changes? And when when I looked at my trade data from this perspective, and I just made these couple tweaks, my break even year went from basically break even to a positive 26R. That's such a big difference. And I've been finding in my back testing, it's super easy to dig myself out of a hole with 3R. I can take a bunch of losses and then 2 wins and I'm out of the hole or whatever, you know. So anyways, that's been super helpful for me. I just wanted to share that, pass that along, because I had been thinking this whole time that win rate was the key. Focus on win rate, become a better trader, find the perfect setup. And it turns out maybe that this is the solution. This was the solution for me. So maybe it could be for someone else. But time will tell, because what you see in your data is a good indicator. You know, I'm looking at trades that I took, which is a solid indicator because I took the trades. And I'm doing it in backtesting, 4 months in of backtesting. So that's probably, I don't know, 60, 70 trades, and it's working. And it worked today too. So that's a long-winded answer to something that's really been helpful for me. So let's dive in today, and I'll show you my trade. We'll do a recap and get this thing journaled. So starting with the higher time frame, coming into today, where are we? So here's today's candle right here on NQ. I had a neutral-ish bias. You know, I'd seen these candles were continually closing below the high of the previous candle. All of these right there. It's starting to feel like it wants to roll over. We have all this inefficiency below. You know, really with that much, I want to see price come back down, balance it out, and then keep going. That's, if I'm bullish, that's what I want to see. We're in this kind of like indecisive zone where, like, down in the middle, it's easy to be like, yeah, we closed above here, so I know we're bullish all, up until somewhere into here, right? Today for me was a little more neutral to bullish. I'm gonna go with the bullish bias because we're going there. We had tapped into this buy side liquidity, so I'd kind of been like, well, and this one, I don't think we had tapped this one yet this morning, but anyways, I wasn't quite seeing that it was ready to roll over, but it was looking like it wants to roll over. So daily time frame, neutral bias leaning on bullishness. Coming down into the 4 hour. So here is the 6 a.m. candle. That's irrelevant for, well, the only thing to say is on the 6 a.m. candle, it hadn't taken buy side yet. And just noting on the 4 hour here, the trend is just obviously bullish. So I'm not going to fight that, at least not till a significant weekly level. This kind of thing up in here. And then going down to the 1 hour, this is the 8 a.m. candle, which is where I started my day. Same kind of thing, bullish on the 1 hour, bullish trend. So I wanted to kind of stick with that hypothesis. Then if that's the case, what I wanted to see is I wanted to see this roll over into a discount, fair value gap, take some liquidity, create an SMT, and then continue on for new highs. And then kind of solidified for me on the 15-minute chart here. The purple is London session. We formed this reversal in London, but it wasn't at such a meaningful and significant level, and it was kind of opposite of the order flow anyways. So I was expecting a New York low of the day down in here on the 15-minute. However, there was some unexpectedness that kind of came up today. So yeah, we formed this low in a 1 hour fair value gap after taking the liquidity, forming an SMT, tapped into the new day opening gap, and then we had the midnight opening price as a target above. So yeah, that was kind of my thesis for my day. And here on the charts, let's load it up. Here's my trade. A lot of stuff. Let me clean it up just a little bit. Keep that there so you can see the criteria. I mean, shoot, I'll just leave it all up and I'll go over all of it. So, put on my executions. What we can see here is I saw this reversal forming at the zone I was interested in. The 15-minute candle was turning into a C3 candle. We confirmed a C2 actually is what happened at this time. And then after we'd taken all the liquidity that I was looking at, I saw my model form on the 1 minute, but I wasn't able to get in. So I zoomed out to the 3 minute. There was a ton of fair value. We can even just zoom into the 1 minute probably. All these gaps down in here. So I kind of saw these gaps is one, more so I wanted to zoom in and get this as one gap. So I zoomed into the 3-minute time frame, and where are we? And that formed at least a more clear IFVG for me to play and give me a little bit more confirmation. And the reason why I wanted more confirmation and why I wasn't interested in taking the first 1-minute gap is because we were out pre 9:30, and that was my big hang up, I guess. The surprise for this trade was I don't typically trade prior to 9:30, which is this blue line right here. Now, so why did I break my rule, and why did I trade 8:50 this morning? One of the things I've been noticing in my back testing is that if 850 macro, so 850 to 910, if that makes this a solid reversal, comes down into a higher time frame level, looks perfect, and it matches my bias and narrative, then basically what I've noticed is 930, when it opens, tends to just be continuation, and you don't get the reversal because I trade reversals. So I decided to go in because it looked perfect and because what I've been seeing in back testing. So we had a 3-minute IFVG. I waited for a 1-minute extra confirmation, which was basically the 1 minute, and it did it here on the 3-minute too. The 3-minute closed above this order block right there. We had all the good stuff. We had a 4-hour liquidity sweep. We had session liquidity sweep. We had SMT tapped into a 1-hour fair value gap. We had high probability targets, which were all these fair value gaps. We had a tailless candle for a target. We had all these equal highs. It was bias aligned. We tapped into the previous day equilibrium. All the assets were in sync. Like, it couldn't have got more textbook in my eye for a long. So that's the reason why I hopped in. So I marketed in on this candle. My stop was tighter than normal. Usually my stop would be below the IFVG. But in this case, because we had formed that swing, I did go with a little bit tighter of a stop loss. Marketed in here. And then I just making some notes here. I noticed that I really quickly wanted to go break even on this trade. I might have been a little sketched out, feeling like, oh, if I'm breaking my rules and entering a trade outside of my trading window, then I'm going to be disappointed in myself. So just noting those emotions, and I think that's important because I wrote this down over here, and I thought it was super powerful, so I'll read it to you. It says, the trader who wins. An amateur trader is inside the emotion. You are the emotion, and you act erratically. A professional trader is observing the emotion. You see the emotion, but follow the plan. One controls you, the other you control. So that's why I jotted down my emotions here. I was trying to just take action on that emotion, wanting to move up to break even too early, which I knew it was too early on this candle. I'm like, it's pushing, and I wanted to go break even. But I stuck with my rules, and I said, my rule is if prices moved away from the entry and it hits after a few candles and it hits 1R, I can go break even at 1R. So I was able to stick with my rules. And then at 2R, I start trailing my stop loss. And in this case today, I saw the momentum building on the 9:30 open. So I did trail my stop loss. Once it hit 2R, I brought my stop loss up somewhere into here, guaranteeing at least some profits. And then after I brought my stop loss up, I went to go move my take profit. And I wanted to go target some of these equal highs. And quicker than I could move my take profit up, it just ran in. Well, basically what happened is I started to move the take profit, but before I could click and drag up in here, it already hit the order, because I'm having trouble describing this, because as you move your take profit, your previous take profit level, it remains there until you've clicked and dragged and then let go. Then it resets your order. The amount of time it took me to drag my stop loss up in here and then try to drop it somewhere up in here to give it even just a little bit more room wasn't enough time, and it just ran into my original existing take profit at 3.7R or whatever. And I think just then I was just saying stop loss a couple of times, but I was targeting this tailless candle right there at 3.7. So anyways, hope that makes sense. Because I've noticed sometimes if it just starts ripping, you can just push your stop loss and take profit up and up and up and squeeze more out of the trade. I don't want to sit here through a bunch of retracements. I'm not interested in that. Like, obviously, if I wanted to sit through this massive retracement, I could have today gotten a 12R, but that's not going to happen very, very frequently. So what I like to do is, and we zoomed in on the 1 minute, that you'd see this a little better. So like, look at this massive candle on the 1 minute. That's the candle that took out my take profit before I could even get the order moved. And those are the kind of candles where, like, when this one closed, I would have just trailed my stop loss up into here where my original take profit was, and then kept pushing my take profit up to reasonable targets. In this case, it would have been the London high. So anyways, that was the plan. I didn't quite pull it off. And I can see my note over here. The didn't move the TP quick enough, and it processed my existing take profit. So yeah, I guess that's kind of a review of my trade. And really the big thing that I take away here is I've been enjoying seeing the 3R play out. And even on the trades that like earlier this week, I took some losses. It wiped out my losses and then some. And so that felt really good. It really kind of allowed me to relax and be okay with my win rate, whatever it is, 41, 44%, depending on the month and the market condition. Well, the market, it can get higher in certain months. My win rate can be more like 60, 70% in certain months. It's I'm either really have a really high win rate or a really low win rate, depending on the month. But it averages out to like 42, and then it averaged out to break even. So this has been a game changer for me, and I really am excited to kind of continue playing with this 3R more, and hoping that it actually, like, you know, produces some of the fruit that I've been working so hard for. And maybe I don't have to work as hard to get the results that I'm desiring, and that would be amazing. So I'm gonna wrap that up here. That's a long enough review. So I'll see you live trading.